In this video, we're going to look at the crypto market and where it might be headed after this weekend. There was an attack. Iran attacked Israel. The market dumped for briefly over on Saturday and Sunday. But what's coming up for the market and where we be going? If I could talk. Well, the first catalyst coming up is the Bitcoin halving. And just real quick, I want to look at like the catalysts and then some of the challenges, the detractors, what might hurt the market. And Bitcoin halving is coming up. We're like 4 days, 12 hours away. And historically, that bodes really well for Bitcoin and the altcoin market as well. If we look at the price, though, of Bitcoin, you can see, as most know, it drops right before the housing in right before the halving, sorry, in two of the halvings. But notice over here, it ran up to not an all-time high and then did drop right after the halving. So I think it's not a guarantee that Bitcoin will immediately start to re-enter a bull phase right after the halving, but it could be definitely possible. The other catalyst is today retail sales in the US report. It crushed. Let's take a look. We're at 1.1% and the forecast was 0.5. That is huge. The previous was actually revised up. That's why this is green. It was 0.3 on the core retail sales, and core is just retail sales without automobiles. If you include automobiles, that's just the regular retail sales. It was up 0.7. So that's really good news for the consumer. Shows that people in the US are buying things, and it should bode well for earnings report. Through earnings in the either direction category, because depending on the type of company you got reporting earnings and how they do, it could definitely affect the stock market. And there's no guarantee that earnings are going to come in good, right? So that could send the market in either direction. Uh, and the while we're on that, let's take a look real quick at the S&P 500 because it reacts closely with earnings since these are the companies reporting them. We've hit a small little, I don't know if you'd call this correction, but a bump in the road on the way up here. And we're only down like 3%, but it has lasted a couple weeks here. So historically, in these mid to end cycle bull runs, we have seen corrections up to like 10%. So there's more room to run down. I'm not saying it's necessarily going to happen, but there's definitely the opportunity for it. The Fed still sees rate cuts this year, which is a good catalyst for the market. Although the markets seem to get kind of gotten tired of that, hearing that lately, as Treasury interest rates are increasing. And they also announced QT reduction in quantitative tightening reduction in May or June. And if you don't know, quantitative tightening is just removing bonds off their balance sheet, and effectively by doing that, they're sucking money out of the economy. So it's just a tightening method that they use, and it's the opposite of them printing money, the PAL printer, the opposite of that. Some of the challenges that the market might see, some things that might extend this correction a little longer than we'd like. Iran war and conflict escalation. Those usually corrections usually last a couple days historically, but it's still a risk. And then treasury rates are increasing, not the Fed fund rate. I'm talking about on the market. The market is pricing in higher rates because of the recently high CPI prints and inflation prints. And and then like we talked about, the market is kind of teasing a possible correction. Just throw possible in there. Teasing a possible correction. Like I said, they've it's gone down before about 10%, and those that also reflect on Bitcoin as well. So let's take a look at what Bitcoin might do. And altcoins don't always follow Bitcoin, but it's a good measure of kind of what the crypto market's thinking. So we hit down what 18% on that last correction. I thought I had some fib charts there. There we go. And if we continue this correction, we could hit what 60 around 60,000 there, maybe a little over under that if it overshoots. But the next level I don't want to see is 52. I think that would be the worst case for this correction. But the halving's coming up, so hopefully that's a good catalyst. Historically is. I personally have some chips on the table because we could be bullish from here, but don't be surprised if we start to deepen the correction. That's totally possible too. Now, if you liked this video, if you'd like to see some more videos where I review coins, altcoins, with data instead of hopium, roadmaps, and marketing, I would appreciate a subscription, and you'll get a notification when I come out with those. And that way, the goal is to speed up your research so you can make decisions, based off real data instead of just some marketing and hopium stuff. So, thanks for watching, and see you next time.